Thank you, everybody. And thank you for the opportunity to talk about Gold Road today. We're a junior exploration company in Australia. We're on the verge of becoming a mid-tier gold producer. Get through that one. The major asset that we have is the Yamana Greenstone Belt, situated out here way out on the eastern side of the Yilgarn Craton. Yilgarn Craton is the gold district which hosts most of the gold production in Western Australia and Australia. In the middle there you can see Kalgoorlie. It's a district which has hosted over 160 million ounces of gold endowment and production over a 125-year period. Our asset base, that Yamana tenement holding, it's about 1,100 kilometres northeast of Perth, covers a tenement holding of 6,000 square kilometres, of which we own virtually all of that, 100%. Got a current resource base of 6.6 million ounces and a reserve of 3.9 million ounces. Those two are in 50-50 joint venture with Goldfields. We've got a second exploration asset which we're earning into in joint venture in the southwest of Western Australia. That's another 5,000 square kilometres. Both those tenement packages are very immaturely explored. Yamana itself has really only had about 20 years of modern exploration compared to 125 years of exploration in the Kalgoorlie district and the other major districts in Western Australia. We started development of the GRUYERE project 2 years ago, and we've got imminent gold production in the next week or so. Quick snapshot of the corporate profile. We've got a current market cap at closing today in Australia of, I'll just mention, all currency I refer to will be Australian dollars. The current Australian exchange rate's a little bit below 70 cents US, it's about 67 cents. And gold price in Australian terms today was about $2,030. Our market cap sits at about $890 million. We've got cash on hand at the end of March of close to $50 million. We've got a finance facility of $150 million, which is made up of $50 million working capital facility and a $100 million revolver facility. Very, very flexible and very flexible terms on those. We've currently drawn, at the end of March, it was $33 million, and since then we've drawn another $30 million. The shareholder base is dominantly institutional. We've got about 29% out of North America and about 12% out of Europe here, most of which is BlackRock, which are our second largest shareholder at 9%. Just going to quickly go through a bit of the journey of where we've got to and where over the last 5 years. The situation with the GRUYERE project itself and our future, which is based around exploration and further development. This is our share price journey since we discovered GRUYERE back in October 2013. At that point we had a discovery, it was a greenfields discovery. We had a share price of about 7 cents. Market cap of about $20 million. From an 18-month period from a brand new greenfields discovery and remote area of Western Australia under the desert, over an 18-month period we completed scoping study, pre-feasibility studies. We followed that up with feasibility studies shortly after, to the point where in October 2016, we completed feasibility studies with a reserve of 3.5 million ounces, resources at 6.6. Bank finance and JV negotiations were a part of the, we completed it in alignment with the feasibility study. In October 2016, we agreed a joint venture with Goldfields to develop the project. Goldfields paid us $350 million in cash for 50% of the project. In addition to that, they had a 10% overrun guarantee where they would cover the first 10% of any cost overrun. They were managing the project. And in addition to that, there's a small royalty on production beyond 2 million ounces. We commenced construction in early 2017. Initial construction capital cost was $532 million. We had a cost reforecast middle of last year to $621 million, it's all Australian dollars. And we've just basically completed construction at the $621 million mark. First gold is expected probably this week. We completed the project virtually without with an excellent safety record. 3 million hours man hours LTI free. Tailings dams are obviously been quite topical over the last couple of years with issues out of Brazil. Just want to mention that the tailings dam is a low risk, life of mine design. It's an integrated landform facility incorporated into the waste dumps, downstream walls, and fully lined with polymers, compliant with the International Cyanide Code. And we take a lot of effort in working with our local Indigenous communities to ensure that they have employment opportunities and contracting opportunities with the operation. This is the first operation in lands in Western Australia, in the eastern part of Western Australia, first mining operation in Aboriginal lands in this area. So it's very important that we work closely with our Aboriginal communities there, and we've developed a very good relationship over the last few years. So as we go into production, we're just ramping up now. We aim to have first gold, as I mentioned, in the next week or so. We anticipate a 6 to 7 month ramp up to full production, which will be at a run rate of 300,000 ounces per year, of which we will get 50% as Gold Road. So 150,000 ounces a year for a 12-year mine life. Current throughput rate is 8.2 million tonne per annum design. I'll talk about potential upside on that. Total reserve is 3.9 million ounces. This is the mine site just taken a few weeks ago. One important thing to note here is the ROM pad. We've got over 2 million tonnes of ore already stockpiled on the ROM pad, which we started mining back in November. It's primary crusher in the middle, SAG ball mills in the middle of the processing plant. The SAG mill has been fully commissioned. The ball mill has just been commissioned on the electrics, just basically the process design control. So we're currently operating on the SAG only. Ball mill we expect to be up and running and commissioned in a couple of weeks. Power is provided by a third party, APA, put in $200 million of their own capital to build a 200-kilometre gas pipeline and a 45-megawatt power station to power the project. We've got paying for power on a 15-year take-or-pay contract at around 20 cents a kilowatt hour. So total capital build, $621 million, was in line with the forecast that we produced last year. Mining commenced in November. Mining will be on the total pit. There's a total reserve of about 100 million tonnes at 1.21 gram per tonne. Life of mine strip ratio is 2.7. Early stages, we mine a 5-stage pit. The stage 1 pit that we're mining currently has a strip ratio of about 1 to 1. And as I mentioned, we've already mined over 2 million tonnes of ore. So we've got plenty of ore on the stockpiles, which provides us a lot of flexibility during the ramp up, which we expect to take 6 to 7 months to full production. It's a very simple mining fleet, very simple ore body. It's a big wide ore body. Its average is about 90 metres wide, over 2 kilometres long, down to a depth of 380 metres in the open pit. Bulk mining, very simple operation with high gold recoveries as well. We expect about 92 to 94% gold recoveries on a coarse grind size. A couple of pictures of the mill and first dummy gold pour there, and we expect hopefully by the end of this week to have our first gold bars. That'll be 5.5 years after discovery in a greenfields district. In production, it puts us at the lower end of the cost curve. This is Australian dollar gold prices, so we'll be producing at a rate over the life of mine of about 1,025 all-in sustaining cost Australian. It's around 750 US, or current exchange rate's about 700 or less. Considering the current gold price at $2,000, you can see that we're going to have a margin in excess of $1,000 at current gold prices. Our reserve gold price is calculated at $1,600, so considerable margins for this project. To our account, this is just looking at the total cash flow, and on a dollar for dollar portion of a dollar cash flow. This is calculated at $1,730. If you make this, say, $2,000, that big grey bar is all the costs, how much it costs for us to run the operation and keep our corporate office operating. It'll be about half the cost of half the use of our proceeds will go to that. We'll pay our taxes and royalties, and we've got a big, large chunk which goes to growth and returns. What we anticipate on that is putting that back into exploration development projects or return to investors. Given that we've got a very low, we'll have a very low debt base, we'll pay that back very quickly, puts us in a unique position as an exploration company, what was an exploration junior, to be able to potentially pay dividends to shareholders at a very early stage. The other aspect you can see there is exploration. We continue to put money into exploration. Over the last 3 years since we signed the joint venture with Goldfields, we've been spending around $20 million a year on greenfields exploration on our rest of our tenement holding, which we own 100%. The reserve base, 3.9 million ounce, is out of a resource base of 6.1 million ounces. Those reserves are at GRUYERE up to the northeast, and then the Golden Highway, which is a number of smaller pits, satellite pits, which will be able to feed into the GRUYERE plant. That accounts for about 300,000 ounces of reserve. The two yellow tenements right in the middle of the joint venture tenements, the rest of the big brown package there, which stretches over about 200 kilometres long, is our 6,000 square tenement holding, which we own 100%. And that's where we're putting most of our exploration effort. But at GRUYERE itself, we believe that there's considerable scope to expand the pit and expand the reserve base. This is a long section through the reserve open pit. The red line in the middle is the current reserve pit. The blue is the measured resource, the green is the indicated resource. This is right north to the right. The orange line at the bottom is the resource pit, which constrains about 6 million ounces of gold. All of the orange is inferred resource. We've just kicked off studies to look at optimising the mining operation to see if we can improve the mining efficiency and the processing efficiency, expand the processing plant. We believe that there's considerable potential to expand beyond the 8.2 million tonne per annum up to rates of close to maybe 9.5 to 10 million tonne per annum. We're also looking at initiating a geotechnical review to look at the mining, the steepness of the pit walls. They're currently very shallow at about 43 degrees. So if we can improve the mining costs, improve the processing costs, and improve those pit walls, drive the pit deeper by maintaining the same sort of cost profile, we start driving into inferred resources. So these red lines here are a drill program we've got currently going at the moment. It's a $2 million drill program to drill the next 150 metres below the reserve pit into indicated resource. And we believe that has the potential to, if all the other studies come through, to add somewhere between 500,000 to 1 million ounces to the reserve base in the next reserve run, which we'll be putting out next year. Outside of GRUYERE, our exploration is focused on our 100% holding. Last year we spent over $20 million on greenfields exploration. It's the biggest greenfields budget in Australia, focused on pure grassroots projects. We completed 147,000 metres of drilling. A majority of that was in air core drilling, which is essentially geochemical drilling, and target testing. We operate a pipeline mentality. We have over 160 projects across the belt, varying from milestone 1, which are our conceptual targets, milestone 2, which is anomalies, milestone 3s, which are bedrock tests, milestone 4s, which will be resource drilling, and then milestone 5, which will be reserve drilling and studies. Over the last 3 years, most of the work has been in the early stages, the milestone 1 and 2s, testing targets, generating targets through structural and geophysical work, testing targets with air core drilling. I'll just remind, this is all undercover. The whole tenement is undercover of sand and sandstones on the edge of the desert, so we have no outcrop whatsoever, so all of our drilling is all remote. The most advanced target we have is the GILMOUR Morello target right in the middle. I'll just touch on that very, very quickly. This came through air core testing of a structural target. We have over 3 kilometres of strike on a shear zone from north to south, offset by a fault in the middle, the Waters Fault. GILMOUR to the south, Morello to the north. It's currently about 400 metres of strike on a shear zone, 3 to 5 metres wide, narrow quartz vein in the middle of that, laminated quartz vein full of free gold with high-grade intersections. That small pod by itself is, we anticipate that maybe being somewhere between 200,000 to 400,000 ounces in resource. We're working on that at the moment with another 2 kilometres of strike extent to the north on Morello. And we've got loads of these targets across the belt that we're testing aggressively. And that's just illustrating again GILMOUR in relation to the southern project area where we're spending about 70% of our tenement exploration this year. So just finish off the journey. We discovered a major tier 1 gold asset in 2013, going into production within about 5.5 years in the next week or so. We aim to be in full production by the end of this year. Cash flow will be over $100 million per year to our account, which we'll be using to keep running the operation, grow our own exploration, and potentially pay dividends to our investors. Thank you very much.